It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast, talking all about the Australian property market. We do that 7 days a week, and you can hear us on iHeartRadio, Spotify, Apple Podcasts, as well as Amazon. Thursday morning today, January the 23rd. And to see that Noosa leads the charge among regions where house prices have doubled or come very close in 5 years. That's according to the Domain's latest house price report for December of 2024. While Noosa shines as a high-end performer, most regions with this growth boasts median prices a lot less, hovering around that 700k mark. Areas like Light, now I haven't been to Light, it is a suburb south of Adelaide, that is topping the 5-year price growth chart. Get this, 107.5%. Wow. And that is driven by its appeal, of course, very close to the Barossa Valley. So if you are in Light in South Australia, you are definitely licking your lips with that sort of money. And coming next, we are back to your summer series, travelling back to October the 20th from last year.
Ready to step up your property knowledge? Access powerful insights with us. You're listening to the Summer Series on the Real Estate Podcast.
It is really difficult for young people to get on the property treadmill, if you will, but I also think that some of them are starting to feel hopeless. And I would encourage anybody who has got first home buyers in their orbit, I would encourage them to go and see a mortgage broker. Even if they know they can't actually afford to buy anything now, what the mortgage brokers can do is help direct people for the planning process. They can go through what levels all of the incentives are at. They can talk about what your options are from an amount of deposit that's required. There's a lot more options out there than a lot of people are aware. And I just don't want young people to think this is absolutely impossible, because it is possible if you get good advice, but it might take, a couple of years of planning and saving, but get the advice you need now. Don't wait until you think you've got enough money in the bank to get the advice, because you'd be surprised the difference it can make.
Yeah, that's a great piece of advice, because, the whole knowledge base with the mortgage brokers, they know the market, they know exactly what you require. And sometimes people don't think that they've got enough money. They go and see a mortgage broker, Leanne, and hello, suddenly, wow, we can actually get into the housing market.
That's exactly right, because there are a number of incentives for first home buyers, and they change quite frequently. So the mortgage brokers are on top of all of that. So it's definitely worth a conversation. Just things like knowing how much money, too much money in the bank, you can't qualify for some of the incentives. There's just lots of tips that they can give you that will make it a less daunting experience.
Yeah, and just talking about less daunting, analysis by money.com.au, that tells us that young Australians now need a deposit 99% larger than 2012 to buy a home. I found this quite staggering. Back in 2012, a first home buyer would need around almost $49,000 for a 10% deposit based on the Australian Bureau of Statistics dwelling values. Today, that figure has now jumped to over 97 grand. It's just amazing how quickly it rises.
Yeah, it's a significant amount of money. It takes a long time to save that. Obviously, house prices have escalated really dramatically throughout COVID. In some jurisdictions like Sydney, those prices have continued to increase. Other places like Melbourne, for example, some of the prices have come back, particularly in the unit market. The problem with house prices is lack of supply. Everybody's talking about lack of supply. The government are talking about what they need to do the number of houses that they need to build to positively impact that, but they're not building them. And we have seen in Melbourne prices come back in some markets because they were the ones who actually completed more supply in the last sort of 10 years than the other states and the other capitals.
Yeah, that supply, just talking about that before the break, Leanne, what a massive headache, what an issue it is. We've talked about modular building our way out of this crisis. Simon Kustenmacher has actually been on the Breakfast podcast talking about full upscaling of factories that can turn out meaningful numbers of modular homes. Should we be investing in this technology at scale is probably the question I'd love to ask you.
Well, we definitely need to be looking at it very closely because what we're doing right now is not working. We are not building the number of houses the government have pledged to build. And part of the problem is that we don't have enough tradespeople. So if there's other ways, other methods of building that has less of a need for specialised trades, we definitely need to explore it. Our housing approvals are down, but in particular the unit market, something like 12% down on the last quarter for approvals. So that's just telling me that the supply is going to continue to be a problem down the track.
And you've done a report, I think it's called the Growth Areas Infrastructure Requirements Report. Sounds a little bit technical, but in simple language, basically you've looked at those growth areas with infrastructure or developing infrastructure. Have I got that right?
Yeah, that's correct. So this report that we've recently released is a report which looks at strategic pieces of infrastructure that are required to support housing supply in a range of growth areas. It comes off the back of a piece of work we did last year called our National Housing Pipeline Project. And essentially that project was looking at undeveloped urban zoned or potential future urban zoned land across the Perth metropolitan area. And it was essentially looking at a whole range of constraints that would potentially prevent that land from being realised for housing supply. And this piece of work takes it a next step and looks at, okay, so we've got this land that we know is zoned for urban development or potential future urban development. How do we unlock that land for housing supply? Because we know we've got a critical undersupply of housing, both for our current population and our growing population. And so we looked at a range of areas across Perth Metro that we knew could deliver housing supply based on government's own plans for future growth to accommodate our population.
Yeah, I know that investors, they look in particular to these sorts of reports. Any report around infrastructure for an area will tell a little bit of a story of just how viable it is to develop land.
It certainly is. Yet we are in a housing crisis. We've got high demand and supply really isn't keeping pace. We've seen that we've had fewer completions of houses. Lots on the markets have gone down. So we released our own data called the Urban Development Index. And for the June quarter, we saw that lot sales were up 54% compared to the same time last year, but lots on the market were down 71%. So it really sort of demonstrates that high demand and low supply. And we also saw the ABS building activity data released this Wednesday as well, which again has shown that completions across WA in the June quarter have dropped from the March quarter.
We are more than just a real estate podcast. Follow each week all of the main talking points and know your property.
In fact, it was last month we spoke to Mark McCrindle, who is a demographer. And I want to get your thoughts about this because he was telling us about millennials wanting the trappings, the luxury and the lifestyle that their parents have, but not down the track, but for their first home.
But yes, you are getting a generation that has a bit more of a focus on lifestyle that probably aren't wanting to compromise as much. In fact, we found in our research that some of them expect to start their economic life in the manner in which they've seen their parents finish their economic life, in that nice house in the leafy suburb. And the only way that can, of course, occur in most circumstances is if the bank of mum and dad or even the property of mum and dad is somehow used to support that transition.
I'm just thinking for anybody, Margaret, that is older than the millennials, if they went to their parents and sort of asked them for property the same value of what mum and dad was living in, first off, probably the parents would say, stop it, you're living in the Matrix, wake up, and then be laughed out of the room.
Well, you can't blame the millennials because it's how they were raised. I think about my time when I was younger. I was raised with a sense that I lived in the place that I lived in because of all the hard work that my parents put in. And if I wanted to have that same lifestyle when I finally left my home and became an independent person, it was going to take me quite some time, and I was going to need to follow that same path as my parents did. But millennials have been raised by a generation of people who, for some reason, want to give them everything. So they grew up in the comfort and great lifestyle that their parents provided for them. Parents didn't withhold things the way my parents withheld things from me. Even when they could afford to give me a better lifestyle, they still made me work for every single thing that I ever got from them. And it meant that as an adult, I knew that I had to work for every single thing that I was going to get and start at the bottom of the rung. So you can't blame the millennials. It's not their fault. It's how they've been raised. They know nothing else. I think one of the things that millennials could take on board is that if they really want to be able to live the lifestyle that their parents have, then they might need to start on the property ladder, maybe even as an investor, buy some of those cheaper houses and units that they wouldn't want to live in themselves in states other than where they live, and gather up a number of properties that then grow in value and accelerate their own savings. If you're saving, but you've also got a property that's growing in value that a tenant's paying for, you're getting increased equity in that property as it grows, and that's dollars to you. And then eventually you can sell the lot.
Core Logic, they brought out some numbers recently. Melbourne, 6th most expensive city in Australia. And look at that. Look at who is number 3. It is your perennial favourite, Adelaide.
It's not a shock to me, but I think it's a shock to many other people to find that Melbourne is so far down the list when typically we always saw Sydney and Melbourne at the top of the table and Adelaide and Perth really at the bottom of that table. Tasmania was for a long time, but came through with excessive growth in Hobart over a protracted period of time. So interestingly now, Perth is number 2 behind Sydney and Adelaide is number 3. But if we have a look at the reasons for that, it's no shock at all to me, and probably the reason why I did invest heavily in both of those areas.
Now, Lochinvar, it is located just an hour from Newcastle. It has outpaced, as I say, nearly all capital city suburbs in price growth over the past year, except for 2 suburbs. And I wonder where those 2 suburbs would be. Can you guess where those 2 suburbs would be? I can tell you that they are in Adelaide. Yes, the darling over the last 12 to 18 months. So that doesn't surprise. But Stephanie, what's the driver, do you think, for the growth and the spectacular growth in Lochinvar?
Absolutely. So being number 1 is definitely affordability for the type of property that you can actually purchase. For example, a home worth in Newcastle for $800,000 will be a lot less, whereas in Lochinvar you can purchase something less than a year old, quite new, the land size, the lifestyle, and also the proximity to growth areas in Lochinvar.
Now, Lochinvar has had this recent surge in new developments, which is obviously fueled by a demand, driven up the prices. Tell us a little bit about what's going on in your market with regard to those new developments, more in particularly, what is actually being built?
Yeah, absolutely. So yes, what's being built here in Lochinvar is a standard of 4 bedrooms, 2 bathrooms, 2-car garage, situated on about 700 odd square metres, and that's what families are looking for, is just that extra space. And not to mention the location in towards the Hunter Expressway, straight down to Sydney and Newcastle, and also the Upper Hunter. So it's more so affordability, the land size, and also the layout of the home is what families are looking for. Not to mention, it is a great place for investment. For example, you can achieve $700 to $800 per week on a 422.
Yeah, I always like the rationale from an investor. So they're just simply saying this is value for money. Beyond that, what are some of the other things that investors are indicating to you for wanting to move into the area?
Especially the age of the homes, depreciation wise as well, just looking at it, and families are looking to move here. So whether they're building and looking to rent a place for a minimum of 12 months. So you've got investors coming in, first home buyers, but for investment purposes, the growth there just continues to grow and it remains steady in the Lochinvar area.
Because we've got first-time buyers that listen to the podcast, perhaps just give us a little bit of an overview, because there'll be a lot of people around the country that have never heard of Lochinvar. Perhaps you can just sort of talk to the rural lifestyle, because this is a bit of a driver for people. They like to have a bigger backyard, a bit of room, and plenty of land around by the sound of it. The other thing that I picked up on with Lochinvar is that it's very close to job opportunities in the area. So perhaps sort of lay all of that out for first-time listeners that don't know anything about Lochinvar.
Absolutely. So Lochinvar is quite central at the moment if you consider moving here for work. If you work in the mines, you've also got hospitality around you, and also the medical industry as well, with the new Maitland Hospital recently opening. And also majority, if you're a contractor, there's plenty of work options in the Hunter Valley. So there's multiple job opportunities, especially for first home buyers as well. If they're looking to get into the market or relocate, there will be a job there potentially for them.
We connect you to the best real estate information across Australia. The Real Estate Podcast.